Welcome back to the channel. It's me, Adam. We are in the thick of earnings season. Last week was pretty interesting with all the banks. We had Domino's Pizza, Walgreens, Taiwan Semiconductor, and all the banks looked pretty good. So maybe that's a sign for things to come. So let's get right into the most anticipated earnings of this week. Before we do, if you're new to the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, options, ETFs, earnings releases, and we're investing for the long term. As always, smash that like button. So firstly, taking a look at Monday, I don't recognize any of these companies. Looks like there's a few financial companies, but I don't recognize any of them. But on Tuesday mornings when we start getting all the big companies, so we have Johnson & Johnson, as well as Procter & Gamble. A lot of value and dividend investors invest in these kind of companies, as well as they are some of the biggest companies in the S&P 500. So naturally, they're in a lot of funds as well. And one of my favorite funds is actually VIG, Vanguard's Dividend Appreciation ETF. You have Microsoft, JPM, Johnson & Johnson, UNH, Visa, Home Depot, Procter & Gamble, and so on. And it only has an expense ratio of 0.06%. And then for the morning, nothing much else. Looking after the close, you have Netflix, of course. And this is a company that I bought when I first started getting into the market. Admittedly, I wish I never got out of it. But to me, I don't know, I just rather have my money in more innovative companies that has a more prominent moat. For example, ASML on Wednesday morning, we'll get to that in a few minutes. Netflix's market cap is $278 billion. Disney stock, for example, is $320 billion. For Disney, in addition to Disney Plus, they also have their parks, the cruise lines, the animation studios, and so on. Like, I'd rather pay a little bit. I mean, I don't know if $50 billion is a little bit more, but you get so much more than just a media company, for example. I don't know, that's just me. Netflix will probably do fine over the years, but it's just not my kind of investment personally. Next up, you have United. This one's been pretty depressed since June time, peaking in March with the recovery trade earlier this year. And then after the Delta variant started attacking the world, these stocks have started slowing down, but the number of cases have also been going down, so there might be some kind of recovery with airline stocks. Potentially, maybe not. I have no idea. There's Intuitive Surgical, and I actually recommend looking at this stock as well. I remember when this one was like $500, and that was back in 2020, so they must have had a stock split because it's now trading for $331. But essentially, since that time, it's gone up 76%. I read a lot of good things about it. However, I just don't understand the healthcare sector that much. There's Canadian National Railway. I pay attention to the railway stocks. Most people don't really look at them, but they give a decent indication of how the economy is doing. They are the backbone of the economy. Think of the amount of goods that are transferred through rail. WD-40, I forgot that was even a stock. Interactive Brokers. And that's pretty much it for Tuesday. Looking at Wednesday, there's Verizon, a stock that I just got into, ASML. And I want to make a video about this one pretty soon. It looks really, really interesting and looks like it could be a potential gold medal stock. Something I've been talking to my friend about lately is that as a long-term investor, you should have the majority of your money in A+ gold medal, winner take most of the market share, long-term buy and hold, accumulate for years and years and years kind of stocks. And the more I'm reading about this company, the more I'm really liking it. Winnebago, which was a stock that I was looking into maybe a year ago during the lockdowns. They make RVs. Abbott, which is a healthcare company. It's a dividend play that spun off of that company, AbbVie. Next Era Energy, NASDAQ. And Canadian Pacific, similar to CNR. They just recently signed a deal with Kansas City Southern, which is a railroad in the United States. And once that deal finalizes and goes through, Canadian Pacific will have the first railroad in North America that connects all three, Canada, the US, and Mexico. And that stock was actually pretty depressed in September, October, and now it's recovered as well as the other railroad stocks. I told you guys, I look at these railroad stocks, they are interesting to me, even though they're value plays. But looking at after the close on Wednesday is when we really have fun. My favorite stock, Tesla. And what else could be said about Tesla? It's been grinding up for the better part of the second half of this year, bottoming out in May, June time, as low as I think it was $550 or so, roughly around that price. And this company is doing amazing things. They're changing the world. You have Elon Musk behind the helm. We already saw their delivery numbers a few weeks ago as well. Love my Tesla stock. And then there's Lam Research, which is a semiconductor company. I don't know really anything about them, but I know that they make microchips. But it also could be a play similar to ASML. I'm not sure. I'd have to look more into it. There's Las Vegas Sands, which I know has been doing pretty poorly as well with all the Macau news coming out of China. IBM doesn't really interest me. I mean, they could turn around over the next 5 to 10 years, but I haven't really looked into them as well. CSX, I believe, is also a railroad company as well. Crown Castle is actually a company I really like as well, as they are a REIT, which is a real estate investment trust company, and provider of shared communications infrastructure. And they've actually been seeing a lot of weakness over the past few months after hitting an all-time high. They pay a dividend of 3.15%, and this could be a potential company that I may look into getting into if it does go down a little bit more. I'll take a look more into that one as well as their earning calls as well, but I still have to do some research beforehand. Thursday morning, you have AT&T, which I don't like that stock at all. American Airlines, Crocs, Southwest. And then it gets a little bit more interesting with Snap on Thursday after the close. Intel, Chipotle, Samuel Adams. And let's take a look actually at Chipotle and Samuel Adams for a second. So since the beginning of the pandemic, it was just under $600, and now it's $1,830. Chipotle Mexican Grill is just over $1,800. It just looks weird to me. It just doesn't make sense, but it is what it is. That's just the stock market. But as a confession, I've actually never had Chipotle before, so maybe it's really good and I just haven't tried it. Let me know in the comments below, am I missing out on Chipotle Mexican Grill? And Samuel Adams stock. And when I first got into the market, I remember Jim Cramer would talk about the stock like every other day. And to be fair, he was correct at first. So I remember when it was around $400, and I remember seeing it climb and climb and climb all the way up to an all-time high of $1,350. And then since then, it's crashed 60%. So that's a dramatic move. I don't know why it even went up that much to begin with, really. And that's pretty much it. You have American Express on Friday. Otherwise, maybe Honeywell. Otherwise, nothing that really catches my eye. But let me know in the comments below which earnings are you most looking forward to this week. I hope you liked the video. Good luck in the stock market this week. As always, subscribe, like, and I'll see you guys in the next video.